One of the things we need to know as investors is how companies that we invest in make money. And Celsius is one of the more interesting beverage companies out there because it doesn't operate in the same way that a lot of other companies like Coca-Cola or Pepsi operates. In fact, there's not a lot to the company except just formulating different flavors of drinks and then working with third parties to get those products into customers' hands. So I'm going to explain exactly how the company makes money, where it adds value in the value chain, and then what other companies have a role in Celsius's success. Because at the end of the day, those other companies are going to have a big impact on how well Celsius does. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. I want to start this by going to Celsius's filings that tell exactly how the company makes money. But first, I want to show how impressive this company's growth is. You can see in this chart that revenue has grown from $22.8 million in 2016 all the way up to $1.2 billion in the last 12 months. Not only has this company grown extremely quickly, it's also grown at a very high margin. You can see that gross margins nearly 50% and net income is very strong. This is very rare for a company that's making a physical product. Typically, you have to invest a lot of money in sales and marketing, in capital expenditures, but Celsius has a little bit different business model. So let's dig into that, and how they generate their product is really going to tell us a lot about why the company can grow as quickly as it can and as profitably as it can. This is Celsius's annual filing with the SEC. So this is the most comprehensive filing that they give to investors. And right here on this, under this section called manufacture and supply of our products, really explains how the company's business works. Our functional energy drinks and supplements are produced by established third-party beverage co-packers. So if you ever want to look this up in their SEC filings, the term to search here is co-packers. This is a little bit different than the bottler discussion that a company like Coca-Cola might have, but this is the way that Celsius operates the business. And a co-packer is a manufacturing plant that provides services of filling bottles or cans for the brand owner. And in the case of Celsius, they actually mix the formula as well. And then what the co-packer does is they charge a fee by the case. Depending on the co-packer, they may also perform distribution functions and things like that. But one of the big changes over the past year is that Pepsi has actually taken over a lot of those functions from a distribution perspective. So that's one of the reasons that Celsius has grown as much as they have, but they still lean on a lot of these co-packers. Celsius is, of course, supplying the formulation for their drinks and the designs for their drinks. And they're also involved in some of the purchasing and making sure there's enough product for what they need for these co-packers. And this is pretty standard as well. You may have a specific supplier that you need, and you're going to either facilitate that relationship with the co-packer, or you're going to order that product yourself and then make sure it gets to the co-packer. As we get to distribution, this is where Pepsi comes in. And this is the agreement that I talked about earlier. August 1st, 2022 is when they signed the distribution agreement with Pepsi, and they have the right to sell and distribute existing beverage products in existing channels and distribution methods for future beverage products. And this is an agreement that goes through 2041 with 10-year terms beyond that. So this is a pretty big tie-up between Celsius and Pepsi, but Pepsi is not necessarily making their products. They're just a distribution or sales. So using that distribution muscle that Pepsi has to the advantage of a company like Celsius. To give you an idea what one of these co-packers looks like, I just looked up a few of these, and this is one example, but you can go in, you can create a beverage, and these co-packers will do basically all the work for you. In some cases, they'll even help design a drink with you. So they're really just a third-party manufacturer. They're going to provide all kinds of different services that you might need, from mixing beverages to bottling, and they're going to do this side by side with other companies. So a Celsius product may be packaged next to a 5-Hour Energy drink. That's another company that typically uses co-packers. So this has become very common in the beverage business, that a lot of these brands are really turning to third-party manufacturing companies. Helps them scale a little bit more efficiently and a little bit more in a capital light model. Then you don't have to become a manufacturer at the same time. Thanks to our friends at The Motley Fool for sponsoring this video.
Visit fool.com/ASYM for the top 10 stocks to buy right now.
So as we look at this value chain, I think it's really interesting where Celsius sits, because what you want to do as a company that's adding value in the beverage business is try to commoditize your either suppliers or customers. And in this case, what Celsius has done has said, hey, we don't want to be necessarily a manufacturing company. Why don't we just go with a commodity manufacturing company, or these co-packers? And there's dozens of them across the US and internationally. They can handle producing our beverages, and then we're going to lean on a giant distribution partner in Pepsi to get products from those co-packers to store shelves. And that's basically the business model. Celsius's job is to come up with the formulas, do the branding, do some of the marketing work, but they're not doing much of anything when it comes to manufacturing and distributing their product. So a little bit different than you might think when you think about Celsius as a company. They're actually outsourcing a lot of the work that they're doing. They don't even have necessarily super proprietary formulas like a company like Coca-Cola that wants to keep their syrup recipe really secret. Celsius is actually allowing all those companies to do all the mixing and producing their beverages for them. So there's not really a lot of proprietary work in the back end. I don't know if that necessarily means that somebody will be able to replicate the product that Celsius is making. That absolutely could be the case. I think we've seen that with products like 5-Hour Energy, where there's a lot of knockoffs out there, but 5-Hour is definitely still the number one brand because it's the brand name and it's the most well-known, and it was really the leader into that market. Celsius, I think, has done a really good job building out a niche as a company that's seen as a healthier drink than a monster beverage or a soda. And the great news for investors is it doesn't have to invest in things like manufacturing plants or even distribution, because it can lean on partners for that. So that's a big reason that Celsius has been able to grow as quickly as it has and at such a high margin profitability. And given the structures that are in place and the momentum behind this brand, I don't really see anything stopping that anytime soon. This is still primarily a North American brand. There's a lot of opportunities to grow internationally. So look for that over the next couple of years. And they're going to use the same playbook. They're even going to lean on Pepsi in a lot of markets. So it's just going to be a matter of building those co-packing and distribution channels and getting your brand out there. So Celsius is a very interesting company to watch, but understanding exactly how the company makes money, I think, is really important. So hopefully this video was helpful in that. Let me know your thoughts on Celsius. And is this a stock that you own? Not one that I own yet, but definitely on my watch list. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.